Hey everybody. So what we're going to do today in this video is what we usually do at the end of every day is just review what transpired in the stock market and then come up with a plan for what we're going to do about it. So as always, what we go over here is extremely timely. So I'm going to recommend that you subscribe to the channel, turn on notifications because we give actionable ideas, key levels, actual process and game plan so that you can, kind of at least have a little bit more of a roadmap for how to navigate this. And this is pretty nasty stuff right now. I've been trading for over 20 years and this is moving very fast as far as sector rotation. And we're going to get into that and what to do about it tonight. More importantly, key levels and where you have to be looking at putting stops, where you should be looking at entering trades. There's a lot to go over, but let's just jump right into it. All the stocks we're going to go over, as well as the indexes, are going to be in alphabetical order. Someone will probably put the timestamps out there so you can sort through them and then use this as a guide during the day. I find that helpful. Some people have told me they found it helpful. Let me rephrase that. So just to get right into it, I was asked about American Airlines, and I'm just going to start. If oil comes in, which I think oil may come in, if oil comes in, the airlines do better. 2/3 of all revenue or earnings is driven by oil pricing. So if they're not hedged properly, it could be a real issue for earnings. So this may be a good thing for this industry, actually. And it might be the thing that propels it higher. Now, let's just talk about American Air here. You've broken this downtrend and you have not gone below this 50-day, as we've seen most of these stocks have started to crater and break below the 50. This 21's actually pointing up. And frankly, the 21 is actually breaking the trend. So I like this. I'm not a big airline person in buying them, but I understand why somebody would look at this. Now, what would concern me is you have this doji sitting right up top here. See this bar? See how you have legs this way and legs that way? Crazy legs, right? So like what that means is we just don't know which way we're going, indecision. Because as we know from studying, when you have a candlestick pattern like this, it just means rejection of price, rejection of price. That's what a wick means. And you'll have, I'll link that video in here for candlesticks for those that aren't familiar with it. But wicks are price rejection. So you can see how it rejected here, and that's told you that you might roll, and it did, etc. What do you do now? Watch this. I think a higher high is going to propel this and get more people involved in American Air. Also, I'm going to give you two more airlines just to look at if you're interested in that space. But if I took out a lower low here, that would be cause for concern. So just keep that in mind. If I broke 23, I'd be concerned. Better balance sheets are ALK. Alaskan Air has a much better balance sheet. It's a much tighter range as well, breaking through this. If you look at this versus the previous bar or the previous AAL, you'll notice that we're closer to the high. Their balance sheet's just better, Alaskan Air. And then the other one, let's just see, JetBlue. They have a much better balance sheet as well. And you could see the trend here. So if you're interested in these names, consider these two as well. But airlines are slow movers. If you're looking for juice in the airlines, none of them trade faster than this. None of them trade faster than UAL. None of them. So just keep that in mind. But to me, AAL does look like it's acting the best in the relative strength. I mean, it is up today. So let's keep an eye on it, see what happens. But you're really looking for it to go to 26. You're not really looking for much. AMC, I mean, last night we all could have sold it for 15 and a half. I didn't really sell any. I mean, I shouldn't even say really. I didn't sell any. Look, I like this flag. I like the fact that we're not taking out lower lows. If we do, maybe it goes down, but I'm not ready to get out of this yet. I like how we keep knocking on this door over and over again, keep hitting this level. And every single time we're getting higher and higher. And if you notice, the open and closes, even though this one was red, was higher than this one. This one was higher than that one. And this was all price rejection. And if you take a look at this, this is somewhat advanced, but let me just give you an idea of stuff that I look at. So you see this price rejection right here? That's all filled. It's filled from this block, then it filled from this block to this block, from this block to this block. It's all filled. So everything that was rejected 3 days ago has been filled. Okay, that's it's telling. Okay, it's telling you that they're walking it up. Now, whether or not it holds, whether or not it breaks, we don't know. But I'm in this. If I broke this little wedge down, it might be a reason for concern. But right now, in a market that turned and went down today, I'm up 57 basis points or 65 basis points. I'll take it. I'm going to recommend that if you're in this, just leave it alone. So ARC K, let's just really drill into this and talk about this for a moment. And I just want to go through a couple things. We're in this at 103. Our stop is 105, or it was 99. It looks like 90, right, to get out. And then we got up to 105 and broke out through this level. Watch. Let me show you what I was talking about. I jumped the gun on it. So you'll see right here that wick, that 105 wick. And we got above that today, and then we rejected. And that takes you right across the top of this as well. I don't think that we're done going up. I mean, I know people are really negative on tech. It's staggering to me how negative they are, but they are. And we are definitely down in tech. This is not the time to be shorting tech. Tech just dropped precipitously. I understand. I mean, there's no question about it. Like, you look at Zoom, people think it's broken. I don't think we're going back to 588 anytime soon, but if I can go from 300 to 400, I don't really consider that something that I don't want to be in. It really depends on how you trade, right? Like PTON, I thought they were done the other day. Now, I have a green day on it. Now, I rejected that see how we reject this level again on it? So you have to really look at what's going on out there. But amongst all this turmoil, to get back to it, from where we put this on, and I'm not saying it's pretty, and I'm not saying it's been enjoyable, but we're up $1.50 in a market that's just falling apart and blowing up. And you really have to start looking at the games that they're playing and understand the games. Like, the games are jam up something small. I'm going to get into BTU and I'll show you one of the games they're playing. Jam up something small, or jam up a short-term chart, lure them in, and then we're going to sell stock to them. I mean, they're the games that are going on. A lot of these games are being played by institutions as well to get out of positions. But take a look at Blink. This is a great example, right? The short position in Blink is going up dramatically. Well, why? If you hated it here, like, this was a clear rejection. This tried to get above and couldn't, right? So let's say you wanted to truly short Blink. I will cover this, but I just want to go through this so you can understand process. So if I really did not like this stock and I thought that this stock was awful and whatever, right? I break this level. Well, okay. And I'm like, well, geez, I broke support. I should probably get out. There's your short. Or, I want confirmation. Maybe we'll hold the 21 day. I'm looking. We reverse here again. You break here. That's it. You're done. Okay, there's your short. We failed support. We're probably going to test this. And then it just kept rolling, and you just keep moving your stop down, right? I mean, that's really all you would have done here is just bear flag after bear flag. Comes down here, reverses, and you're probably out here. You're probably not holding for this whole ride back down to here. So the question is now, what do you do with this? Well, if you're shorting this here, you're setting yourself up for disaster. Okay, that's the first thing I'm going to say. Why do I say that? I have a falling wedge channel in a stock that's down over 50%. Okay, now I'm not saying we're going to 58 anytime soon. That's not what I'm saying. I'm down 60% from the high. Do you want to short? Good luck. So story hasn't changed, right? We've got some things we have to understand where stocks can always get worse. Yes. But what do you do now? Well, in regards to this is really simple. Okay. If we break through this, you're at $39. I'm at 33. It's 20%. I don't mind making 20% on my money in a short period of time. So you have to just think a little bit differently until this all works itself out. And spoiler alert, how this movie ends, it ends with tech going back up. Okay, whether it's today, whether it's September, whether it's July. And frankly, for me, I don't think that you see massive moves back in tech till July or August. I think July at the earliest, obviously. Because a lot of them are broken. But that doesn't mean that I'm not going to get a double bottom bounce to a resistance level. So you have to think like that. You have to take what the market's willing to give you. Some people want to sit on the sidelines while this plays out because they're looking for that 100% gain. That's fine. My style, if you pay attention to what I do, is I change with the times. I don't have one style. I change with what the market is doing. If the market's telling me I'm a trader, I'm a trader. Last year, it told me to hold stocks, and I held and did quite well. This year, it's telling me you got to get out of the way, right? Get out of the way, honor your stops, move on. And we'll get into one of the trades that I did today that I took a loss on, so you can understand where I'm going with that. So that's what I would do with blank. I mean, I think that there's a play here. Okay, you're at the 200-day. I guarantee anything just by looking at this chart, right? So I have this 5 and this 8 crossing, and I'm I haven't looked at this yet, but I can almost guarantee that this RSI. I mean, you do this long enough, you kind of see things before you even see them. Okay, so the RSI is setting up to break out. Okay, what is that going to do for this stock? Higher peak, lower peak, lower peak, and we're set to break. So let's see if the chart's doing that while we're at it. Nope, hasn't done that yet. Okay, so what's a leading indicator? RSI is a leading indicator. Is the leading indicator telling me that we're going to break the channel? Yes, it is. Okay, so you look for little nuggets like this, and it tells you what to do. So for me, I don't know. Get me through 21. If I get through 21, I think 50's, going to be an issue as well. Do I want to wait for that? No. Get me through a 21 close, and I would be on this. I would be a buyer because I'm going to assume that it's going to push. And if it's not going to push, then I'm just going to use the low of the previous day as my stop and get out. If I lose $1 or $2, I lose $1 or $2. And if you're concerned about losing $1 or $2 in this market, then you need to change your style and sit out because you're doing nothing but taking losses right now, right? Constantly. You should be taking losses every day, holding the winners and seeing if they work. Very similar to what we did with ARK, right? Hold on the ARK, maybe it works. I think that this can work, but time will tell. Let's get rid of this RSI since we're not going to use it. Also, I like doing the pre-market videos live, and I think we're going to start doing more of them. I'll have something formalized on a time and date by next week. Right now, I'm just going to keep doing them informally for the rest of the week, but by next week, I'll give a time and a date on how we're going to do it, how long we're going to do it. I am not going to do it during market hours for obvious reasons. My focus needs to be on trading. So that's how I eat. So here we are on blank, and that's what I would look for here. And let's get rid of this 5 and the 8 going forward because we don't need it. BTU, these are the games I'm talking about. Everyone and their sister. I got to get in this. It's all about BTUs. I mean, we were talking about this yesterday. Like, this is not normal. These outsized returns that you're seeing on these names, this has never. Let's just walk through it just so you can understand what's going on out there, right? This is a great example. 32% move in a day. Okay. You had one here. You had one here. Okay. How do they all end? They all collapse. So why would you think that this time is going to be anything different, right? So by just spending a little time and understanding what you own, you're going to look at this and go, oh, wow, this is really it. BTU is really going to move. Peabody Energy. Look at this volume. I can't stress enough what's going on out there right now, okay? This isn't a major downtrend from here, okay, to here. Okay, you're down 86% in 2 years. You think Tuesday when you buy it is the day that it's going to move. Like you have to think like that a little bit, right? And I hate to be facetious like that, but what I'm getting at is like, no, man, it's not going to move on Tuesday because you bought it. It's going to lure you in and it's going to play whack-a-mole, okay? And that's what you have to understand. This is whack-a-mole. These are people getting out of it. These outsized returns you're seeing in these little names and second-tier names, they're just playing whack-a-mole with you. That's all they're doing. So just consider that. BTU, you need to be out of. Coin did exactly what I thought it would do today. I didn't call it out, and I should have, but it was a short right here at the 250 level. That's where your new resistance is going to be, where they went quote, public before they sold all their stock to all the shareholders. And this is about as nasty as you can get. Now, what this does do, this gravestone does sometimes, why this is all price rejection, does sometimes institute a short-term bottom. And I just want to get this and clarify this out. There is this convertible offering that's out there, and they are shorting the stock against the offering. People are. So when it got to 250, they knew to short it, right? Thinking that maybe they'll price it at 250 and then they'll short it, put it on, and then they'll just book the difference in the spread. There's a lot of games that these guys play that are buying the bonds. And they don't know their allocation yet, so they're going to have to hedge their allocation, right? It's an institutional game, but the bottom line is if they shorted, if they think they're going to get an allocation of these convertible bonds, right? You and I are not getting them. These are for institutions, multi-billion-dollar institutions that are held, they prime with Goldman, those types of guys, right? So when they get filled, if they're short here and they're going to cover here and they're looking at like a 250 conversion rate, they might cover their short. Okay, and which could lead to a push up in this. Now, if this does push up on that news, I would short it then. But just be careful of that. If they price this tomorrow or the next day, this could have a move up. A lower low would just, because you see how we stopped right there? It's funky. It's a little cheesy, right? 238.25, and we just happened to stop at 238.50. It's almost a little too hokey. So like that's the level where they've decided that they're going to be buyers because they know that they're going to have the right to sell it up here. And they know, okay, there's 10 points on the trade, right? So they know that they're booking another 4% on their convertibles annually. Something like that as they lever them up. I can get more in detail on how those trades work if you're really that interested. But the bottom line is it could bounce, the short version. So see what's happened? We just rejected. So I said this the other day, and I guess I'm going to do XLF now, and I'll review it again. You're coming to the top end of the band. You get to the top end of the band, you could roll. This is the move that we had on the XLF. It's huge. It's enormous. It's not going to stop, but you just had the XLF, just to put it in perspective, go up 23% in 3 months. It's an enormous move. I mean, you had financials move 40%? And that's what I'm getting, the point I'm trying to get across. These moves, they're not normal. So I do like this trade, and I do think that it could work. I'm getting an indication that it's actually trading up after hours, but I'm not sure that that's a real print. But we'll see. But I do like the name, but you need to get above this line and stay above this line. That was our buy. It didn't do what I wanted it to do in order to own it. What it did do was just happen to open right on the line that we talk about, right? Pop its head above it just enough to lure you in and then slam you down. And I wouldn't be surprised if it did it on like a 15-minute pattern. Let's take a look. So let's go take a look at this. So here we are on the day. Yeah. So, I mean, here's your day, 15 minutes. So you never broke above that on the day, right? So there was really no reason to ever buy this. They didn't even lure you in properly. So you spiked above it. Maybe everyone thought you'd break out there and they buy that. And then the wick rejection. As soon as you reject on this wick and close at the low, if you're still in this and 15 minutes later you get this trade, that's a godsend. You just blow it out. But you can see how you just couldn't even hold that level. So there are my thoughts there. This stock and this move I like a lot, and I think that these stocks are going to do fairly well. There's a lot going on here, and here's what I really like about what I see on this trade. I like this a lot, and I was considering putting in the newsletter. It's just very hard with the newsletter right now because everything is moving so fast. So I'm trying to figure out a faster delivery system for ideas and stops, and I think I have one. But let's just get into it. So you see how you have the flag here? And then you build this flag. Let's get rid of all this for a moment. Let's get rid of all these horizontal lines for a moment. There's too many. Get rid of all the horizontal lines. Okay. So let's just look at price for a moment and get an understanding of why this is so significant. First off, we just left this trend line here, right? It's been here since we've been watching the stock go down. Stock comes out with earnings and goes up. Look where it opens. Look where it comes back down. Look where it tests. We never fall back into the lower downward trend line. It never happens. It's the first thing. Second thing, see how you are above right here? See how you are above this? Let's drill into this. I guess this one's going to go a little longer too. See how you came right to there? We're actually, hold on one second because I'm off. 23.39. Come on. Okay. So that's the high of this bar, 23.39. Okay. And that's the peak, right? If you go through these bars. Okay. So that's the peak of that rally. This closed above it, came back down, tested. It's kind of like a crappy morning star, but not really. And then you bounce off of it, and then you take out not only this high again, but now today you've taken out that high. Okay. So sometimes it does pay to spend a little time and really study a chart and what's going on. Now, what did we do? Throwing some more bells and whistles. We closed above the 50-day. Well, when was the last time we closed above the 50-day? Is the 50-day ever support? Is it ever resistance? I don't know. Let's take a look. See where I'm going with this? Hopefully you can kind of laugh at it, but it's not rocket science. Okay, well, here's where we got to the 50-day, and what happened? Well, it didn't get above it. Well, that's not good, but we got above it this time. Okay, so if we're above the 50-day for the first time in 4 months, okay, that's significant. So let me get this straight. I'm making a higher high. The 21's curling up. The 50 is starting to curl up, and I guarantee the 5 and the 8 look good. I know just by looking at that, I can tell that, and you'll be able to too the more you look at this. But okay, so we have a 5-8 crossover here. We're bouncing off of this, and we just made a higher high. This is a very simple trade, right? This is set to go higher. Now, can it break? Absolutely. Where's your stop? It's the low of this bar. So you're going to have to figure out how you're getting in this if you want to be in it. And I'm not saying that you're going back to, I'm not saying you're going to 60 anytime soon, but I do think within the next 3 to 4 months, you could get back to this 34 level, right? And that's a 50% return, and that's not a bad investment. So I do like this trade, and I would tell you to keep your eye on it. So there was one thing I kept saying to people that to watch this, because all these retails are breaking, right? And someone wanted to buy this, and I was saying, hold off. This is a very simple trade. I'm not going to spend a lot of time with it. You've broken out of your major channel. Look at this, right? You right on the open, right on the line, boom, and you've closed above it. You've closed above that channel for the first time since here. My advice is if you want to play it, play it. If you take out the lower low of 34.5, right? It's a very tight stop on this. If you take out 34.5, just get out of the way. Because if it takes out the 34.5, every single time it's broken this line or hit this line, every single time, let's just go through this. Okay, so it's here, 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 here. I was looking at this chart. Every time it reverts to the mean. Not once. I'll say it again. Every time. So we've hit the top end. We get to the 21. We hit the top end. We get to the 21. Right? I mean, it's like Bill Murray, Groundhog Day. Boom. Every single time. So if this does not go parabolic, and I'm going to preface this, it can go parabolic, right? We just watched Dillard's go up 50% in 2 days. So if they decide to squeeze this by everybody and their sister deciding that they want to own Callaway Golf, then that's what's going to happen. It's going to go higher. So really what you have to do is go, okay, 35, 55 is my high, 34, 49 is my low. I have $1 risk. You buy the breakout, you're buying 35, 60, and if it takes out the low, you lose $1 and you blow it out and you wait again. And that's it. That's your trade in a nutshell. Okay, because this can move. For some reason, I skipped this, and I'm not sure why it's not in here, but it should be. And I apologize for going out of order. But I try to stay in alphabetical order because not everybody can constantly review these and go through them all. And some people are nice enough to actually put together the timestamps for us. But let's just talk about what's going on here. Okay, so here's your breakout. 1 is your huge breakout. 2's the follow through. 3's the day where we're like, oh boy, we're really going to go this time. And we open here, and then we really run, and then we go below the open, and then we go from there. And how'd that work out? We reverted to the mean. The mean of the stocks usually is the 21-day moving average, simple moving average for me. If you use the 20-day, I don't really care. I mean, let's just overlay the 20-day. There's your 20-day overlaid, right, on the Bollinger Bands with the 21-day. I mean, the 1 day of data point moves it roughly, what, 2.5% off of me using the 21-day. Okay, on a $100 stock, it doesn't even register. So it's just silly. But use whatever you're comfortable with. I like using the 21-day. But see how we rejected here, but we closed right at the top of this. All I need is my lower low tomorrow, and this thing's toast. And that's how I feel about it. I think it's going lower. I did short it, and I did okay with it on my short, and then I was short again, and then it gapped over this high, and I closed it for a small loss. I actually was in the options, and the options were the implied vol was so great in the options that I was actually able to not get that hurt with it, frankly. I think I lost 20% on the option, which is not bad at all. Then when I rallied the other day, I mean, everybody was aware of this. I put it back on at 150. And, I'm in the options right now, and I'm just holding on to them. I personally think this is going to go to 128 at a minimum. I'm out to June 18th on the options. I have the 140s and some of the 120s. But I think that this can there's no reason that this can't get back to 108, 110 and just completely do what it always does. It is a retailer. It is not a technology stock. So I don't care that they're going to buy their stock back and they're going to do all these wonderful things. It is what it is. So it's a department store. So they're not the new Amazon. FNGU, I put out there as a buy today. I thought it was going to go, and I was wrong. And I'm going to walk through what I saw. And, because I said this was going to be in the newsletter. It's not going to be in the newsletter now because of what transpired today. We opened. We should have pushed, right? I mean, it was perfect. And this is what I say sometimes, and, best waiting for the close. Now, when we got above that level, I'm like, man, we're going to go. This is really going to go. This is a reversal bar anyway, this green bar gapping down here. We undercut that bar, right? So you see that? I'll put a line here. Like, man, we undercut that. Wow, did we ever undercut that before? Yeah, we undercut it here. Wow, how'd that go? Pretty well. Okay, so there's a little method to the madness. Did we take out a lower low from this one? Yes, we did. Okay, so we have a double bottom in, and we still could have a double bottom in, but I need to see what's going to happen here. It just did not act the same way as ARC acted today. ARC is up. FNGU is not, for whatever reason. I just need to pay attention to that. Could be the triples, that it's tripled. But so at the end of the day, I was very blunt on Twitter and just said, hey, I'm blowing it out. And here's your pattern. Boom, boom, boom. And then bonk. That was it. Here's your basic reversal bar. Here's your break back down through this. And that was it. And I held it until it was down $1 and then looked at the end of the day. And this was nasty. Let's get rid of these indicators. But this was nasty. I build, break, rally to the high of this point, essentially. And then I just collapse in the last 15 minutes. And why come in tomorrow and see this at 24 and 24.10 and wait for it to trade back? It's pointless. Just get out, come in tomorrow, fight another day, move on. Not really much to do. FNKO, look, these things are doing what they've been doing, right? They're rallying and then they're collapsing. Now, here's the thing that's interesting about this, and I'm going to point this out. When you start going through periods of time like this, where everybody thinks they have it figured out, by the time you think you have it figured out, you don't. Okay, it's really that clear. So the fact that everybody now is shorting these things when they're shorting breakouts, and everyone thinks that this is the time to start doing that, this is when people start getting clipped hard, that think that they're like big short sellers. you need to be really careful playing with any kind of new technology like NFTs right now. These things could just run you over. So just keep this in mind. I would not be short this. I like the breakout. We closed at an all-time high, right? I have two of these. Oh, this is spelled wrong. Maybe that's bad. Let's get rid of that one. So put this one here. But you see where I'm going with this? Now let's go through this. Okay. And you have this 25.25 level we talked about. We've broken this major downtrend. We're going to $31. It's a question of when that happens, in my opinion, not if. Especially on these breakouts in this movement. And this NFT stuff is not going away. I mean, I'm not going to get into the whole discussion of it, but it's not going to go away. So I think you're still going to $31. Could you roll here before you go back up? Absolutely. Could I be wrong? Sure. But I think it's going higher. Today's action was just people I don't want to be caught with the next time bomb. I don't want to be LV'd, right? I mean, that's really what's going on here. I don't want to be in that situation. Just get me out. I'll get back in at another time. Okay, that works until it doesn't work. So that's why you always have to have a process. With everything, you always have to have a process. So this acted very well today, FUBU. And I like the move, and I like how the 21 days starting to curl up and how it's responding to earnings. And getting above this 22 and closing above this 22 is going to be very significant. The other thing that's going to be very significant is getting above this 50-day, which we have not done since March. So just keep that in mind. I do like this trade. Get above this 50-day, and that also get you above 22, and I think we're in good shape. So FUTU, look, I just wanted to point this out. In regards to this, I can see why people like this. But with that said, you went right to 126.62. Okay. What was the high of this? 127. And you've rejected. And these are rolling and pointing down. I do not see any reason to be a buyer of this. The reason I have this up and the reason it's actionable to me is if I was in this and I took out this lower low on this wedge, I would be out. So there are better people to answer these questions about the miners and how they work and the leverage of the miners and, what percentage of their mines are silver or gold. I'm just going to talk about the trade in and of itself. All these rallies like this, they all end the same exact way, okay, like this, and then they collapse. It is very textbook with miners, okay? You get these peaks, right, where you're at like $6, and then what happens? Now you're at $4. You get a peak, you're at $8.90, you're at $8.40. 2-3 weeks later, you're at $5. Okay, maybe this walks itself up like that because how the moving averages are pointing up. But these wild wicks, they scare me. So for the people that are in HL, you really need to understand what you're doing, and you really have to understand miners, and I don't. So the only time I play these are, like when I'm playing a contra trend, when I'm trying to catch a bounce off a base. Like every time it gets to the 200-day, I'll buy it, right? Like if I wanted to own this, that's what I would do, because every time it hits the 200-day, it finds support, right? Not so much the 50 or the 21, but the 200, for whatever reason, it respects that. And the volume is picking up, and this can work itself higher. It's just not something that I would chase. I would actually be on the other side of this trade. I'd be waiting for this to break at this point, hold on. I'd be waiting for it to break the 822 level and go from there. Now that said, you did have an all-time high close here, which you haven't had in a while, or a year high close. You haven't had that in a while. But I'd be very cautious with those. MED, I just want to point this out for the person that asked me about it. Listen, you're running right into this resistance line. You're running right into it, and you kind of started already to reject. If you take out that low of 309, realize that this can get really nasty. If you reject off these levels, the majority of time you revert to a mean, which is the 21-day moving average. And if you look at this, it's done it 1, 2, 3, 2 times. Not 3 yet, but I wouldn't be surprised. I put this out on blast today on Twitter that I was shorted, and this is just very nasty stuff. And I think that this could be very fast. If not, I'll just cover it and move on with my life. But when you see this H, Like that's a lowercase h, right? And then I'm closing again below the 50-day. It just means that people have thrown in the towel. So to me, with the way lumber prices are collapsing right now, the home builders and supply builders, like just look at that sector and what's going on out there. Like there's Lowe's 192. Okay, 5 days ago, this was at where? Okay, you're down 10% in a week on Lowe's. That's the point that I was getting at. We bought Lowe's on the break, 204. We traded it up. I think it was 204. What price did we buy it? Stopped out $2. We bought it at 204. Since we bought it, it traded all the way up to 214, something along those lines. And then it rolled. And as soon as we broke the support, we changed it and just left the stop in and went from there. But what I'm getting at is when these things roll, this can be really nasty. I mean, look at FCX, right? It's just sitting there, but it's no different from where we sold it. I said sell it at 44-ish, and it's just sitting there. So you have to be careful of these commodity kind of stocks. You really do. Now, to me, is just very, all this gain that you just saw, that was going on for months, this is going to go away in days. So to me, I don't really see major support in this until there's some at 75. There's a minor support there. You have some in here at 66. But I think you're going to the 200-day on this, and it's why I shorted it. I'll leave it on, and if I'm wrong, I'll cover it. But I don't think that I'm wrong. I think that lumber prices are going to continue to collapse. When we're all talking about inflation, chances are there's no inflation. It's when you're not talking about it. How we didn't talk about it for a year, and 2x4s, doubled in price, actually quadrupled in price at one point. So PLCE. So this is a pretty nasty reversal on what you'd expect. To me, this would be something that I would look at saying this could be a short. You broke out, and again, this is a retailer for children's clothing. It is not a technology company. There is not major growth. So the idea that these stocks should be going, 30% in 2 days is just silly. And that's exactly where did we go today? Yeah, 35% and 32% in 3 days. I mean, it's just ridiculous. So, but everyone's playing the same trades, and that's what's happening. So what you need to do here is figure out what your move is. Your move is that when you get to this level and you take out this low, that you have a huge evening star trade that possibly could take you back down to $80. And if it takes you to $80 and you're short it, you can make money. I would not recommend buying this stock at all at these levels. If I was in this, I'd get out. But to me, this is a short. Taking out that low here, it's a short. I can't be any clearer about it. RBLX, I like the name. I like the earnings. You're staying above this level, but this reversal today where this was rejected again, I mean, this level is rejected. And let's just take a look at what's transpiring here, okay? So it gives you an understanding of what's going on. Okay, there's the high, right? See how we ran right to that high? See how we opened here, then ran up, then reversed, and then we came down and tested this new support? See how this is hollow and a wick, and this wasn't hollow and a wick, and this other bar right here wasn't hollow and a wick? So that means that the buying is drying up, right? So over time, you'll be able to read them like this. But that means to me that this buying is dried up. And now I'm at this 74.83 level just sitting there. Well, we know what happens next, right? I mean, we know how the story goes. So it needs to hold here or it breaks. Okay. And right now you have this wedge that's right here where you haven't had a lower low yet, have you? The first lower low is going to be interesting to see how the stock reacts. I would just leave it at that. This is not, I definitely would not be chasing this. I understand the earnings are exceptional. RRR, I put it out there. I said, you're at the top end of this channel. If it breaks this like it did the other day, it could go parabolic. What did it do? It encapsulated the breakout bar with a bullish or a bearish engulfing, right? And it broke this level back under this. So to me, this is just an outright sell. I would not, especially in a tape like this, I would not wait for the next day. I mean, you're going to have to wait for the next day now, but I'd be gone. I would not be playing with things like that are doing this in this level. And I would go and see where it could go to, and then maybe come and take a look at it and go, gee, every time it hits this level, what does it do? Well, it reverts to the mean. It took 5 days there, took about 2 weeks here, took about 5 days there. This one might go faster. Might take 3 to 5 days before you're back down to that 37 level. So that's something that you're going to have to consider, but that's how I look at that trade. SE had great numbers. I missed one, and I don't know why it's not in here, and I wanted to throw this out there because I was asked about it, and I apologize. We're not completely out of order yet. We're still in order. So 335.31 on this Roku, and just watch this because it's acting exceptionally well. You're getting buying, you're pulling back, and even your red bars are moving you up. So I like this. I think that you have major resistance levels up here. But, this is not going away, and this could break, and you could run. So I'm not saying you're getting back to 500 anytime soon because this is broken, but you have work to do. And I think when you get that work done, you'll be in good shape. So you just have to wait right now. That's really all you have to do. Okay. Consider waiting and doing nothing until this plays itself out. But it is shaping up very, very nicely, and put it on your radar. I would watch this one. Look, SE is a great example of what you're doing here today. I understand people want to be on the sidelines. That's fine. If that's the way you trade, I actually even get into that on the newsletter today. If you want to trade, but realize that you're going to have to put a lot of time into this, right? Like this isn't, and I even make a joke in the newsletter, like we're not out popping bottles, driving Lambos. We're sitting here studying every single night on what happened, looking at our positions, getting better at our craft. If you don't want to do that, put the time in, do yourself a favor, and there's nothing wrong with it. Go buy some bonds, go buy an index fund, and call it a day. You'll probably be happier. But if you're going to try and get outsized returns and you're trying to get better opportunities for yourself, you're going to have to put the time in. It's just that simple. These people that are showing you videos, this is how I got into this, and I guess I'm going on a rant, but how I got into this was I watched the crap that was being put out there on Twitter and YouTube of, oh, this is what you do. I trade from the mountain. It takes me 2 minutes a day. It's a bunch of crap, right? Like we're studying this. I've been studying it for 20 years and I'm still learning every day, and hopefully I'm getting better every day. That's the goal. That should be your goal too, right? Don't get upset and judge yourself by other people's performance. Judge yourself by your performance. And did I get better today? Did I make smarter decisions today than I would have yesterday? Are my habits becoming automatic? Things like that. So, I don't sit on the sidelines in a bad tape or a tough tape. I want to get better. So I trade them. Sometimes it works, sometimes it doesn't. And that's okay. I accept it. It's who I am as a trader. But the point I'm getting at is like something like today, people say, well, there's no opportunity out there. Well, this is up 20 points today. So there was opportunity, right? Might not have been the one that you went with. You might not understand the games that they're playing. And I want you to kind of think about this one for a moment. It's kind of why I segued into this. Do you see how the game changed here? Right? This is why this is some of the stuff that I look at and study. And I don't, no one likes to call the bottom. And I kind of said that we were bottoming in a couple of the newsletters and a couple of the videos. And I do think we're bottoming in tech. And I understand that people want to be in cash and they don't want to play it. That's fine. But do you see the difference in the patterns that are happening? Did you notice how the gaps up are breaking down, but the gaps lower are going up? So we gapped lower here, and what did we do? We went up. Well, what else did that? We gapped lower, and then we went up, and we never looked back. Okay, so you see where I'm going with this? But what else is happening? Well, everyone knows that you short these now. Do you? You short the breakouts? Okay. See where I'm going? Like you have to think about what's truly happening. I see a ton of volume coming in. I see people buying. I see people trying to chase performance anywhere that they can find it. So when the volume does move and goes back into tech, and let me say this again, it's not a question of if it goes back into tech. It's a question of when it goes back into tech. Why wouldn't I want to be in down here versus back up here? Why do I have to get in at 276? Why can't I try to figure out how to get in it? See what I'm saying? You kind of have to always be reevaluating what you're looking at and how the breakouts change. Now, if you are a can slim trader, you are not buying this. You are looking at this and listening to me right now and going, he's delusional. That's fine. That's how you trade. There's absolutely nothing wrong with it. But there's money to be made here. And I want to crack at trying to make it. So it's just, again, it's the way that I trade. So I talked about this one a little bit, SIVB, and I don't know why it gave me that, SIVB. So, but what you're going to see here is this. Look, this SIVB, I stated you got to stay above this level. You're not really above it right now. I'd be really careful here with the financials. They're a little concern of mine. Stocks, if you got stopped out, I think we have this in the newsletter. I know I have it in the newsletter, actually. For some reason, this won't come over. I'm not going to play with it. Look, I really don't think you're that broken here. I mean, we didn't even make a lower low from yesterday. I understand the selling. I understand that this can get worse. It can always get worse. That's why we use stops. But this dips lower, I'll probably be a buyer. And I'll be a buyer of it at this point until I break the 200-day and close below the 200-day. I mean, what is that? Where am I at? I'm at 29. It's $1 at this point. So it's worth it to me. Now, it might not be worth it to somebody else, but to me, if I can buy this for $1 and it goes to 36 and then backfills and then goes back up, then and it takes a couple months, that's fine. So it depends again how you trade. Square, to me, I just think that it's becoming increasingly clear that it has a major problem. You rallied above this level, you failed, and you cannot close above the 200-day now. So just watch. I'm pretty sure that the majority of this happened at the end of the day. Let's just see if I'm right about that. Not really, but let's go back to the daily. The fact that you can't hold this and that this is pointing down and this could exacerbate and actually get worse. With Bitcoin, it kind of tied itself to that. Sun W, this is exactly what I'm talking about. And I understand why people don't want to do it, but you're seeing money move into these solar stocks. Now, why now? I really don't know, but you are seeing that. And I just want to point this out. As time goes along, this 21-day will start flattening out. This 50-day will start flattening out. Doesn't mean it's happening now, but when this starts bouncing, it's going to go. Where's it going to head to from these levels? Well, most likely it's going to go to this $12, okay? No, it's not at $30. No, I don't think it's going back to $30 anytime soon. But I do think that this could trade to $15. And if you look at something like that, if I could be at $15 in 3 months, I'll take that. I'll take that move. So it depends on how you want to trade and what you're looking for. But the fact that this is riding the 200-day, you should be paying attention to this. And it's pretty clear to me that we're not even getting to the breakout bar, which was right here, right? We're not even going to get there. Now, if we roll here and this takes it out, that's a different story. But when you start coming in like this, you just have to start asking yourself if the companies are going out of business or not. This is pretty textbook stuff. We had a ton of volume came in, went right above it, went right above the wedge, lured everybody in, and what happened? They closed right below it, right on the line again. So we're below the 200-day, and we closed at the 566 support. But let's just look at this, just so you can understand. We opened at the low, cut underneath, and bounced right above it. Maybe it's not over. Maybe we're just basing. So I would just tell you to keep an open mind on some of these things. Now, if they crack these levels and they start rolling, you have your answer. But just maybe, they are bottoming. And bottoming does not mean that you go straight up. I hope I'm getting that point across. This is a pretty powerful move off the bottom. And I like this. I like how you undercut, tried to get above, failed, came back down. And just notice on this TTCF, this is very interesting. And I don't know where the NAV is on this. If somebody knows where the NAV is on this, if you could just, where they did the actual deal level on the SPAC, if you could just message that to me, I'd be very curious. I mean, I can find it out myself. I get swamped. But this is really interesting. That's not what I wanted to do. What I wanted to do is put this here. So let me just go to here. So the line I'm interested in now is here. Why is it here? Because this was the close and that was the high. I'm now above that, but now take a look. Let me throw this up here because that's going to be, this line's going to be significant in a moment when I show you this. And this video is going a little longer, but I feel like we're learning a lot, or hopefully we're all learning a lot. So look at that wedge, right? And then you can see the other wedge too, right? So now you're above that wedge. So we're breaking wedges, and the angle of the wedges that we're breaking is doing what? Changing trajectory. That's what you want. It's exactly what you want. So, you know, I think it's vegan food. I'm not a vegan, but I do like, I'm going to say I do like green, but that's such a cheesy joke. But I do think that this could run. Now, here's the top of the wedge. That's where it would take me to, 22.5. So you have to find a way into this, right, to get to that 22.5. Buying this with an $18 stop where I'm going to make $1.50 or lose $1.50 is not really exciting to me. So I may need to see this come back down, look for a little contra pattern and give it a chance. And then maybe I blow it out. If I break this 1880 level, I don't want to be in it. I definitely don't want to be in if I break 1880 because that gets me below the 50-day. And I don't want to own anything below the 50-day, and I could use that as a stop. And this 200, I'm not really that worried about right now, frankly. I think you're going to get through that. But I'd like to see it come down and do a contra trade. UPST, look, this couldn't have been any clearer, right? Let's just move this bar right here. So you clearly rejected the 120 level today. I was pretty clear about this early in the day. Hopefully people got it, what I was putting down. This was the line that we were talking about. That one, no, that's not it. Hold on. That's where we are now. This is the line I was telling you to watch. So you ran up to it. You gave me one bar. And this is what I want to show you. This is what they're doing after these have rallies. They're giving you the signal. Okay. This is a great example of it. So the signal on this is relatively simple. People that have money that trade professionally look for this pattern. We look for a break. Here's the opening bar, right? And then we look for a break of that opening bar above the first 15 minutes and we buy. Institutions know this. So what they're doing is they are having that trigger. High frequency traders in second tier names like UPST is a thinner name so they can play these games. They'll break it out and then they'll just trap you. And that's it. Now they got out of their position and you're still in there because you bought the breakout. One way that you can avoid this is this. Okay. Start going with longer time frames on those trades. Instead of using a 15-minute, okay, on the thinner names, you use the hour. Right? Because you're not going to screw with the hour. They can't. It takes too much money, too much flow. They don't need to either. But you could see if you just use the hour range, you wouldn't even have bought the stock today. You would have just avoided the whole trade and you wouldn't have lost money. So that's one way that you can, think about trading during this. I keep getting asked about this stock, so I'm going to cover it. I do not see any reason to be in this at all. XL, this is one of those SPAC names that one of the bigger accounts on Twitter kept telling people to buy. And look, this thing is never going to go anywhere. I don't know what its cash position is. I don't know what it's making, but it is very clear that the only people that want to be in this is retail. No institution is buying this down here. It's not happening. And you can go through these and truly see, when you get to these 21-day moving averages, like on CCIV, how you got down to here at 17. I think at $15, I said if you were interested, maybe you could buy it there. All these names, you just need to be really cognizant of what's going on here and just avoid them until they show you signs that they're going to just do something. But this is showing you nothing. I mean, you're going to get excited because you're above the 21-day. I was above the 21-day 10 times here, right? I mean, it was just a short. So just keep that in mind. That's definitely something that I would not be in. So in regards to the XLE, I just want to go through this again. And I'm going to put this up here. Also, do me a favor if you can, share this video because what's going on out there right now is very tumultuous. So if you have friends that are looking at this, people need more of a game plan than they have right now. I mean, I got that. I did a Twitter space yesterday and I was kind of shocked by some of the questions. So people need to know what's going on out there. So if you have people that are in your investment group, consider sharing this so they get some feedback. Looks like I went way over where I wanted to be today, but that's all right. So this XLE, you're reversing again right at this key level. So I think that this is setting up to falter like now. I'd like to see it break out so that I could buy these names, the MROs of the world, and, really lever up and make some money here. But to me, these are just setting up for absolute rolls, and it's commodity based. So it leads me to believe that I'm right. And let's just go through this so you can understand this level again. We keep going through this level, but here's that level. Okay. And we're just dancing right on it. So maybe it breaks it, maybe it doesn't, but it's not looking great right now. So I would not be in any of the energy names. I'd wait and see that. This XLF, as I walk through, you're at the top end, you kind of revert to the mean, right? And then you're getting back up there again. This bar leads me to believe that you could see some selling and get back to that bar. So you could see some weakness in the XLF names. So just consider that. The one thing I keep showing, and people are kind of laughing about, but like, I would really be watching this XLK, this tech. This is not awful. You got to the 50-day, you rejected. You're just trading there. This is still pointing up. This is coming down. But, this is not an awful index for you guys to look at and consider. Just watch it. And this is Apple and Microsoft. So, and I do have a position in Apple, just FYI. So that's it in a nutshell. As always, any questions, feel free to message me and we will go from there. And I will talk to everybody later today or tomorrow.